It's Tim Melvin here with a special edition of Community Bank Investor. And, in case you can't tell, I've got my Thanksgiving shirt on. It's got a big turkey on it and all that. We're getting ready for the big holiday season. Super excited about it. We've got the kids coming in, and more importantly, they're bringing the grandkids. There'll be a few granddogs. It's going to revert back to the holiday madness that is my favorite time of the year. Now, we've switched up some things. I've got my turkey shirt on, I've got the Christmas shirts ready to go. We have already switched to the Snoopy Christmas coffee cups. And one of the things that I've noticed, and I'm sure you have too, is we're starting to see these special Black Friday advance offers, and they're on Substack, and everybody's doing it. So why not? I'm going to jump in too. What I'm not going to do is have a special team marketing session where we all sit around and figure out the exact turn of phrase or phrases that gets your attention and draws you in and either scares you so bad that you'll part ways with a couple $1,000 for great strategies to protect you from all of the bad things that are going to happen in the world. That usually is buying gold and royalty trusts to protect you and your family. So if you're really scared about where the country's going to go, buy some gold and some royalty trusts. It'll work out really well for you. Um, but or find that collection of words, phrases, and push buttons that will have you believing that you can turn a few $100 into hundreds and thousands of percentage returns in a very short time. Or, and this one's been working gangbusters lately, sell you a paid membership in a political tribe with lots of strategies on how to protect and grow your money away from the evil clutches of all the other political tribes that bear you ill will and are trying to bring about the demise of this great country. Those are the three kind of bang, bang, bang hot buttons everybody goes for. I'm not going to do that. I thought about it, but I'm not going to do that. It's real simple, guys. The community bank investor is based on a strategy that I have known for an extremely long time. It's investing in small community banks that have lots of capital with great solid loan portfolios at steep discounts to tangible book value. Now, I'm a value guy. Always have been at heart. We've learned a lot of things along the way, but deep all the way down, I'm a value guy. I'm a value guy that values book value is the best way to put it. And I know it gets belittled. Book value doesn't matter, and it does. And stocks bought at a discount at to tangible book value with good credit have continued to outperform. That gets a dose of steroids when you apply it to community banks. I think it was Marty Whitman. I'm going to attribute it to him, but just in case, if it wasn't Marty, then it's my original. No, um, that if he could buy a quality financial institution earning an adequate return on equity at 75% of book value or less, it was going to be pretty much impossible to not make money. We've kind of hung our hat on that one with the bank strategy for decades, and it is yet to let us down. Now, when I first got interested in banks, it was the early 1990s. The S&L crisis was still bubbling along. There were closures in some banks. I was just back into the Annapolis, Maryland area, and had joined a small regional firm, which was eye-opening for me because I'd been at wirehouses, and this was a whole new thing. This was selling stocks and bonds. And in our firm, we made a market a lot of small local bank stocks in the Baltimore, Washington area, and we sold a lot of muni bonds. And it was very incredibly educational. But there was one guy in our office. This guy got in at about 9:29 every morning. He was one of the nicest guys that I think I've met in my life. I really enjoyed this guy's company. We probably went to dinner thousands of times over the years. Just all around great guy. But he went to lunch every day, promptly on time, one of the last known active practitioners of the three martini lunch. And by 4:30, he was comfortably ensconced in his favorite dockside saloon in Annapolis most days. Now, in spite of this, he made a really good living. He lived a really good life. And so I bugged him. I was like, hey, what is going on here? I mean, you're not working hard. I'm working, 7A to 7B, digging up clients and calling people and talking to people. And you make a few phone calls to go home. and you're making way more money than I am. And he told me, he said, look, it's small community banks. I've been in this town for a long time. I know all the banks, I know all the players, I know the buyers, I know the sellers, and I've been able to turn that into a really good living. And so, being me, I started looking into and investigating small community banks. And it turns out that when you talk to people, and I talk to people all over the country all the time. So this was kind of, I didn't just do it in my hometown. And the smart money in every single town, everywhere, and everybody that I talked to all across the United States. And I probably made, I'm going to say 60, 70 phone calls on this at the time, owned bank stocks. They owned small community bank stocks because in that period of time, they really were. They were licensed to print money. They were available at incredibly attractive prices. In the aftermath of the savings and loan crisis, these things were cheap. One of the first banks that I bought for myself and clients was a small Maryland savings and loan. And these guys were exception to the rule. They were trading at 25% of book value, but I had a couple clients that worked there. So I talked to them and, what's wrong? Why it's just the atmosphere, the savings and loan fear, everybody's stuck with the stock. There's nothing wrong with our bank. And sure enough, 2 years later, that bank was taken over at over 100% of tangible book value. I had a client, and this will really always start in my mind. If I was ever going to have any doubts about developing a specialty in community banks, this one cured it. This guy was a business owner in town, very well respected, brilliant guy. We used to go to lunch a couple times a week. I still hear from him from time to time, all these years later. This was back in the 80s. He bought one local bank. That local bank got bought by a slightly larger local bank. Then it got bought by the biggest bank in the state. Then it got bought by Nations Bank, and which then, of course, became Bank of America. Through all of these successions, he kept the stock. So he got paid a big premium the first time, a big premium. So, long story short, roughly 50 grand turned into over $1 million over a period of time. And I've seen that happen on several occasions. Now, we've really developed this, and by the year 2000, we kind of had it down to the numbers, right? We knew exactly what we were looking for. You wanted banks that had lots of capital, that had solid loan portfolios, that had really smart individuals running the bank, the conservative guys that knew that at its heart, banking is a conservative business, and the ones who reach for the extra 100 basis points are the ones who end up out of the business with a lot of people mad at them. So just well-run local banks bought at a huge discount to book value. We have had literally winner after winner after winner after winner in small bank stocks. Now, we did keep track starting with the newsletter in 2013. From 2013 all the way up through today, we have closed hundreds of trades. Literally, I mean, hundreds of trades, but we've only closed one at a loss. And both the predecessor newsletter to this, which gone the self-publishing route, left that one sort of behind, I guess. So from that one to this one and on, one loser, and it was a small savings and loan that was bought out by a credit union for a loss of 3%. So taking that portfolio to this portfolio, hundreds of closed stocks, lots of really happy investors. I literally had a subscriber call me and say, look, I'm not renewing next year. I've got enough money now. We've made a ton of money with these small banks. I'm retired. My wife wants me to just put it all in the bank and just leave it there and no more investing. But thank you. I had no answer for that, except, well, thank you for the business over the years. And that's been our experience throughout, right? We've had exceptional performance for people, solid renewal rates. I think we've lost more people who passed away than who got mad at us and stopped subscribing over the years. Or just decided it wasn't for them. And that's okay, because a lot of people will decide this is boring. I don't really like it. I don't want to be involved in it, but consistently it's delivered winning picks, right? We've had well over 100 takeovers over the last 10 years or so. I said all but one at a premium. Sometimes we kept the stock and let it compound. Sometimes we just cashed it in there. It all kind of depends on pricing and valuation at the time. It's a quiet compounding strategy, right? We are not looking to get rich overnight, right? But when we buy a pile of quality assets at 75, 80 cents on the dollar, and that quality pool of assets grows and the multiple that somebody else is willing to pay for it grows, you get kind of a double compounding because the book value is going up and the at the same time, if you have the multiple people are paying, well, now you're really in the sweet spot because you have a growing book value and a growing multiple, and that is, they used to call it the Davis double play over at the Davis funds. I'll just call it double compounding. Makes sense. But um, some years you're going to beat the market. Some years you'll lag the market. Okay, but what you won't have is a disastrous year because the strategy is very much self-policing. When we're at a market bottom and everybody's throwing everything out, throwing the baby out with the bathwater, and all banks are selling off, just like all savings and loans were selling off. Um, you're going to get banks and a lot of them that are priced at stupid prices on basis of price to tangible book, which is our number one metric in community bank investor. That's the most important valuation. We don't. There are some variations, like in the banking credit report, where we use a combination of price to earnings multiple and dividend. In this service, price to tangible book is what matters. Okay, so you get these really low price to tangible books, but they have great loan portfolios. They have lots of extra capital. They're small town banks not involved in any of the shenanigans that might be going on in the financial world. And there's lots of them around to buy. Now, when you get to a 2006 or a 2019 or a 1999, you look around and you're getting banks taken over. So you're getting cash in and there's nowhere to put them because you've got your checklists and you go, well, okay, yes, no, no, no. There's nothing left that fits the strategy to qualify for new purchases and additions to the portfolio. So you're self-policing, right? As markets rise, there's fewer opportunities to put money to work. So you're going to build cash or put it in fixed income or whatever else on the side over here, rather than attempt to buy the wrong securities at the wrong prices. However, when things fall apart and everybody's puking, and your broker won't answer your phone, and nobody's real happy. Everybody's 401k is now a 200.5K. That's when the system's going to be going, hey, look at all this bank over here, and look at this bank over here, and look at this bank over here, with good, conservative, strong management that own a lot of stock in the bank that haven't done anything stupid, but their price is now on sale. All right. This is very much a self-policing to this strategy. Um, Most of the time, I'm just upfront. Most of the time, this is really boring. Okay, we're buying banks. We're not trading stocks. This is not a swing trading strategy. There's not going to be any options involved except as an occasional hedge. And I will tell you, we will hedge from time to time. And I will tell you, and I will explain to you what it is I think that you ought to do. But this is more like owning a portfolio of banks, owning banks, more like a bank private equity firm, your own personal private equity firm. That's kind of how I've always thought of this. We're going to own them as long as none of the numbers change and they check all the boxes. We're going to own them. Now, the variable we cannot control is day-to-day stock prices. This will be less volatile than most other strategies because it's an illiquid, inefficient corner of the market, right? Well, that's what makes it attractive. Charlie Munger was once asked, if you had to do it again, could you? He said, no, we really couldn't. There's too many eyeballs looking at each and every stock. The field has grown too much. We couldn't do it again. He said, if I was going to try to replicate what Warren and I have done, I would find some illiquid, inefficient corner of the market and specialize in it. He didn't realize it at the time, but he was describing community bank stocks. So having said that, we are on the verge of a really big cycle for community banks. And I'm just going to kind of, looking at 2025 and beyond, the Trump administration incoming has unwound what frankly was some aggressive overregulation by the previous administration. So after years of pretty strict regulatory burdens, we're seeing a meaningful and consistent shift back towards more business friendly policies. We see this in the appointment of Michelle Bowman, a former community banker whose family has been involved in banking and still is involved in banking in the state of Kansas. She's now vice chair of supervision at the Federal Reserve, an enormous positive for the industry. One of the benefits of the rollback in regulations is the M&A boom is coming back. Banks have been consolidating in this country since Reagan signed the first interstate banking legislation back in the mid 1980s. In 1994, Bill Clinton signed the piece of legislation that poured gas on that and made it, boom, the rule of the day. And we just saw a tremendous boom. We started at 18,000 banks. We're now down to, it's between 4,500 and 5,000, depending how many mutual thrifts are right now today. So the M&A boom is going to continue. We're probably going to get down to 1,000 banks, right? We have way too many banks in the United States. And when you look at the fact that we've gone to a digital age, so branches aren't as important, and banks can serve more folks with less people, M&A just makes a lot of sense. Also, banking is a business of scale. The larger you are, the larger your asset base and your earnings base to deal with regulatory costs and technology costs and all of the other costs that are coming along. After 3 or 4 years of really volatile interest rate conditions, we're into some relative stability. We may even see rates begin to go down meaningfully next year. We'll see. Lots of the smaller banks are still really cheap. We bought a bank just the other day at 70% of book value that had very few loan losses, very few delinquent loans, and an enormous amount of capital on hand. And we were able to pay just 70% of tangible book value for that bank. Banks are sitting on more capital than pretty much ever before. So banks are perfectly positioned for what could be a huge boom driven by lots of M&A. So here's what, if you sign up for this, we're going to give you a special offer, and I think it's a pretty cool offer. I think you'll like it. You get weekly issues. We'll cover everything that's going on in the industry. We'll look at credit. We look at everything on a credit first basis. We'll see what the Fed's up to because they have a big impact on us as bank investors. Try not to be horrifically boring, but we'll give you market commentary. We'll give you the industry trends. We'll take a look at what's going on in M&A, and we'll try to educate you on what it takes to be a better bank investor. Now, the other thing that we've done is there's a lot of yield opportunities with community banks. There are community bank subordinated debt, there's bank risk transfer debt, there's bank preferred stocks. There's all sorts of opportunities that produce large, reliable flows of consistent income. When we find them, we bring them to you. And if you go back in the archives, you'll find reports on some funds that invest in some bank-specific securities where you can get 8 to 10% yields from, very low risk alternative investments. So we've got some preferred stocks in there with, trading below par with 7, 8% yields. We've got some floating rate preferreds that have some really unique and interesting opportunities. So those are just kind of bonus picks. We're just like, hey, I've ran across this. It's very cool. You need to buy some if income is your bag. We do track the portfolio. We will post the portfolio usually as part of the commentary every week. If we get a deal, you're going to know about it right away, as quick as we can get the announcement out to you. Boom, it will be there. We're at, I think right now, 13 stocks in the portfolio. That is going to expand. One good pullback, and we're going to add a whole bunch of numbers all at once. So here's a chance to kind of get in ahead of that a little bit. List banks right here The only thing left that we need checked is the valuation box. They've got tons of credit. The loan portfolio is fantastic. Conservative management that owns a lot of stock. We're big on skin in the game here at the Community Bank Investor. We like skin in the game, and we like really smart people in the shareholder list, something we'll talk a lot more about as time goes on. So here's the deal. This works. It's worked for over 3 decades. I've helped a lot of people make a lot of money. This will not be the most exciting thing that you have ever done, but I think it might be one of the most profitable. It will not qualify you for membership in any political tribe. You'll have to do that on your own. Pick your own tribe around here. We're in the tribe of taking a super conservative approach to investing and using it to make a decidedly non conservative amount of cash. This will not make you rich over the next week, over the month, but over your investing career, it just might. And it will also enable you to sleep a little better at night. So here's what I've got for you. We're going to do 30% off. Black Friday sale. Didn't get the turkey shirt out for nothing. So for the first year, you get 30% off. Next year, you come back. If you liked it, well, then you're going to feel pretty good about paying us the regular price and staying with us, hopefully, for a very long time because we passed the litmus test. We made you money and help keep your cash safe from some of the wilder fluctuations in the market. So this works. I will do everything in my power to help you make money from community bank stocks. We'll identify community bank income opportunities. I'll try to help you learn more about building and managing a portfolio of community banks. So if I hit plus tomorrow, you're ready to do this on your own. So link down at the bottom, you click there, you sign up, you join us, you get 30% off. I think it's a pretty good deal. I didn't have any marketing team or anybody else come in. I did an outline. I sat down. I talked to you because that's how I want to be treated. I'd rather be talked to than sold to. So I hope you join us. This is a good deal on a great product. It's worked for a lot of people. I think it will for you too.